Welcome to our weekly market analysis. This analysis for the week of February 1st, 2025. Believe it or not, January is already over. We are in the second month. It already feels like it's been a year. It's been a very eventful month. And I believe with our lunar year just happened and Chinese lunar year, the volatility will be um, quite a bit this coming year. Well, this year, actually, in 2025. So, what we're going to look at is this week, I want to pay attention, is the central banks. Last week, we talked about Bank of Canada, European Central Bank, and US Fed. Uh, they all had their meetings. Bank of Canada reduced their rates to 2.9. European Central Bank also did, but the Fed is holding up. And correctly, as you know, the tariffs are going to affect. So there's lots of volatility and a lot of unknowns. So the tariffs are really a factor for volatility. Uh, we could have a lot of reaction, but I believe you need some time to digest. So there will be some extreme moves as we saw on Friday. We'll talk about that. One big thing coming up this week on Friday, we have the non-farm payroll, the employment numbers. Um, we also next week, remember, we have the Bank of England will come up with the rate decisions, which most likely will reduce the rates by quarter point. We had big earnings last week from our Magnificent Seven. We had Microsoft, we had Meta, we had Apple, we had Tesla. So this week, we'll continue with a couple of them, the Google and Amazon, but also pay attention to Palantir in the AI platforms. And it's important to see how they're doing. They're a little different than NVIDIA. Also Disney coming out with their earnings. And of course, last Sunday evening, we come with the news of DeepSeek, and it affected the whole markets the following day. It's really rattled. And even Nassim Taleb thought that was a black swan event in AI as a whole in AI innovation. So we'll see what happens. Of course, end of January, we have the end of the month performance report. So again, last week, the most important thing was that Wednesday when we had the FOMC decision, they kept the rates intact. So uh, again, that was important to pay attention. We also had the PCE, which is the inflation gauge that the Fed likes, and they were, as expected, they were up at 0.3%. As I mentioned this week, we want to pay attention on Thursday. We have Bank of England rate decision supposed to go down a quarter percent. So we want to pay attention to that. And then what we have, as I mentioned, Friday is uh, not only United States, but also Canada at the same time will come up with their unemployment rate. Um, the yield curve has become steeping and positives slope. So we see the spread is now at 33 basis point. So what kind of a week was it? Well, it was looking, well, Monday was rattled. The markets went down, then they had a up, and then Friday, uh, toward the end, the last half an hour, 45 minutes, the news came out that President Trump is going to impose the 25% taxes on Canada and Mexico and 10% on China, effective Tuesday. So the market sold off. So the strongest market was the Dow, and they were up 0.27. NASDAQ was biggest hit, of course, because of also the technology hit on Monday. They were down 1.64. S&P was down 1%. Gold was up 1.85, but copper and crude oil both were down. So as a whole, markets were down almost 1%. We can see that the big portion came from the US large cap growth at 1.52%. We see the mid cap growth was actually kind of flattish. It was only down 0.5%. So as a whole, what we see is, again, Friday, we see in quite a few indices, we had this engulfing pattern. Friday, again, we started up. As we see Monday, what happened to the markets. Dow doesn't have as much, obviously, technology. There's financials are there, industrials in there, so it has been the strongest and way above. Again, all the markets are above their 50 and 20-day moving average. We see that the Wilshire 5000 was again the reversal on Friday. You can see these big tails, not in Dow, but we see these tails that again that was the reversal. The 10-year yield, on the other hand, did go to that 50-day moving average and then bounced back. The dollar had been down, as you could see, because of the yields were down, but then we've had this move. Again, with the tariffs, you have to conclude that there will be strength in the dollar. So just anticipate that. We have crude oil has been softening. And of course, what happened was, again, with the policies of, again, the new administration. But again, if there is going to be tariffs and Canadian import or export, imports from Canada, of course, energy and electricity, but energy plays a huge role. So temporarily, I think you will see a bounce on the crude oil. Volatility, it's all over. We were down and then we jumped. As far as the sectors, we see the discretionary still above its 15, 20-day moving average. Communication was up nicely, but look at technology. This big gap. I mean, we tried to fill half of it, but we are against the 20 and 50-day moving average. Industrial is still above, but again, they had a gap. The same thing with basic material hugging their 50-day moving average. Energy, well, it was a big drop. We had also Exxon and Chevron numbers came out. They were down. Staples hugging that 50-day moving average. And then we see the healthcare has been, we talked about a few weeks ago as our ETF of the week. So, and then utilities were down. Financials, again, they've been the strength. I think this year they will be the stars. And then real estate still flattish under its 50-day moving average. Internationally, what we see is Friday, because of the tariffs, lots of red candles. So I mean, that's that commonality you see all over the world. So again, the Chinese markets, they've been off, they're coming back. So, it was a lunar holiday. So we'll see how the reactions will be. As far as sentiment, we see the bears have come back. They're above the average. The bulls are also above average. So the holds kind of split. As far as fear and greed, it's the same kind of with the AAI sentiment. We are in a neutral, getting close to that fear. We'll see what happens on Monday. But amazing that we are at 0.72 in the Citigroup euphoria. So let's go over the charts. So we've been holding this 6,000 area, which we've been talking about, this extension. What it is, we are just about that 8-day moving average. So either if things turn around, we fill that gap, but that's our resistance, 61.61. But if we break, we could easily go to our 38.2% or that 59.62 area. So That 5,900 zone is 50-day moving average. So let's watch this coming week. Again, we got the non-farm payroll, but also the tariffs. The same thing when we look at the retracement extension, we see the 6,000 area again is support. If we break down, we see that 5,877, that's presents at 5,900 to 5,877 presents our next support. So be aware of that. And then we see we are above the 18-day moving average, but we have this engulfing candle, and the sellers came. We are overbought. MACD still up, but it could reverse, so be aware of that. NASDAQ, the same thing. We've cleared that overbought, but the momentum is flattish, and we are right on that 18-day moving average. I want to share this with Russell, and I looked at it in our market outlook for 2025. We thought Russell, is hitting some resistance, so it has had a nice move up, but we are right now in a short term also. From the trend lines, you can see how we are hugging that trend line, so there's a resistance there. And then when we look at that 100-day moving average, we've been talking about that 100-day moving average has been a struggle, and we are overbought, and MACD could cross down. The Dow, again, engulfing candle, but it is nicely above its 50 and 18 and 100-day moving average, crossed it, a golden cross, and we are embedded. So of all the indices, Dow looks the most stable. But I also, I think for 2025, the mid cap, with the strong dollar, with the tariffs, they might, and the interest rates, higher interest rates, they might perform better than the other indices, especially small cap and NASDAQ. So we are above 100. We are above the 18 crossing 100. We are overbought, and MACD is kind of flattish. So let's see what happens. But February historically is a negative month. So just remember that. At least, the first 10 days, and then we go up middle of the month, and then we come down again at the end of the month. We see the transportation right on that 100-day moving average. So we want to be aware of that. The momentum is down, MACD is crossing. So that's a warning sign. The 10-year yield hit the Bollinger Band and bounced. We are becoming embedded. So that should be good news. But if we get oversold, then we should have a bounce to 18. And then the next one, which is the upper edge of Bollinger Band. The opposite true in 10-year yields. We are above the 18. And we are actually overbought, trying to be embedded. The same thing in the 30-year bonds. We'll see the dollar. Again, we had a couple of weeks of sell-off, hit the Bollinger Band, and now we've moved from oversold. We are moving up. So generally, when this happens from oversold, we are right against that 18-day moving average, but MACD is trying to cross. So it's important to see that. Now, if the tariffs are, they go through it again, it's supposed to be effective Tuesday. If they go, there would be obviously big movement to dollar. So be aware of that. And the opposite true at euro. In euro, I'm looking at, I've talked about many times, we could look at the parity going to 1. So we are in crucial point. We were overbought and then clearing that, but momentum is down. Gold has been nicely hugging its Bollinger Band. We are against it. We just went to overbought, but it looks like we almost embedded. So this should sign a strength. So we are above 18, above 100. And when we look at silver, had a really nice bounce. Finally, we broke above that 100, but we are outside the Bollinger Band. We came back in. We are overbought, so be aware of that with the red candle. but this Bollinger Band could expand, so that could open up. On the other hand, copper, remember, there's a lunar year, celebration, pretty flat. We are in away from this oversold, so let's see, we're hugging that with no decisions. We see the Bollinger Bands are closing. And then Bitcoin all over in a sense of, again, hugging that 18-day. We are, again, flattish. MACD is flattish, but it could be reaction. Again, it follows the technology. If you have a breakdown, if the dollar gets strong, that could affect the Bitcoin. And then we are hit that 110,000 is a magic number. So we'll see. This has been, you go back and we see we've been in a nice channel. So, and then, between like 85 to 110. So we'll see what happens. There's a little flattening MACD. As far as crude oil, yeah, we broke down. Now, we are oversold, and the tariffs could have a temporary effect, reaction. So watch that. One thing I want to, just one chart that I want to share is the coffee. Look at the strength. Look at this, the Bollinger Bands, how narrow they were. They were coiling and coiling, and we are oversold, and boom, now we are embedded very nicely. We are, although, we look like outside Bollinger Band, but Bollinger Band's open. This is like a railroad track, so huge move, and it was a big move in coffee. All right, let's take a look at expected move. We see how we respected that lower edge of the expected. We did go outside on Monday, came back, closed that gap, but then what did happen? A reversal, and we just right up, right inside the lower edge. The same thing happened with NASDAQ. We were right the lower edge. Russell was a little stronger, so they just stayed inside uh, our expected move. And then the Dow was the opposite. Look, we were hitting right against the upper edge of expected move. The same thing with our 20-year bonds, the same thing against with the gold right against the upper edge. And then we had silver, did go outside, came back right inside. The same thing with financial, outside, came back inside, respected that. Energy was a big drop, and but that's a huge drop. Again, we had a couple of stocks, their earnings as well, and the crude oil, but that could be again, something we want to pay attention to. So quickly, I'll go over our January. Every month we go through this, the performance. You see the winner was coffee, and then palladium and platinum, and silver and German DAX. Euro stocks did well, and gold was nicely up, even corn. And then the Dow was a stellar winner um, for the markets at 4%. But even S&P was over 2%. Generally, these are the futures, but generally all the indices were above the 2%. The big loser was the VIX and then the cocoa. But as January goes, generally what happens, there's the market. We discussed that in our outlook. So it was a positive January, so hopefully that will bode well. As far as our sectors, what we see is basically, I'm sorry, this is our Forex. As far as the currency goes, basically what we see is, again, Bitcoin is still the big winner. And then we see the Euro British pound actually has been winner, and dollar Canadian, USD versus Canadian dollar was up for the past month. As far as the sector goes, the best performing sectors were communication services, almost 9%. financial 6.5%, healthcare, basic material, a big loser, which is unusual to see. You don't see that. Technology was down a little under 1%. So we look at the world, we see the companies around the world, we see Taiwan Semiconductor and JD.com was up 17, Alibaba in China, again, up 16. We look at it's still some semiconductor companies did well. In Netherlands, the ASML, and we look at Shopify in Canada and Toronto Dominion in Canada, Cayman Island, Nucor did well. So basically, we see quite a bit of green. So, but February is a weak month, so be aware of that. And then for year to date, you see again, most of the indices did well. They're positive. Gold miners were a hero. They did very well. Gold and silver were up. You see a lot of green. As far as S&P 500, on the other hand, the big ones, and especially again, what happened on Monday, Nvidia's of the world, and then Apple's earnings, and there was a big. We talk about that in our trade of the week. So we see they were big time negative, but we have Amazon, Google coming up with their earnings. Meta, actually, the DeepSeek helped that they were up for the month. So we have tale of two stock markets in a sense. As far as the S&P 500, the best performing is actually CG and then CVS and GE. They were pretty nicely up. Starbucks. So as far as the worst, we see again, there's Constellation and branded drinks. Becker had a bad earnings. They had a big drop. So Las Vegas Sand. And then, of course, you see NVIDIA down almost 11%. As far as the Dow, the best performance was at 3M, then IBM and Goldman Sachs and JPM. And then we look at basically the worst was the NVIDIA, Apple, Microsoft, Verizon. As far as Russell 2000, Fubo was up 220%. And then the worst one, we had more IGMS, and these are the list of the worst ones. Just as always, look at our portfolio, our stocks of the month since June 20th. The portfolio is up 101%. Twilio is the big winner, up 155%. Poet is up 137%. Lulu is up 66%, and BMY, but Bristol Myers up 45%. And at the same time, the indices are up about 10%. The big winner has been the IWM, the small caps up 13%. All right, thank you so much. We will move on to our trade of the week.